You are tuned into the K-State Radio Network and Agriculture Today. It's our Friday edition, meaning we will let you know what's going on, first of all, on the grain markets, and with the good help of our regular guest on that topic. Dan O'Brien is a grain market economist with K-State Research and Extension. Well, Dan, of course, we've got this volatility, which riddles the markets almost on a daily basis here, but you generally say at the outset that we see these markets somewhat range bound right now.
Well, yes, particularly for soybeans. Again, we'd see that soybeans, since we'll kind of preface things in the context of the March 7th run up. That's when prices shot so high for the markets. Since that time, soybeans had gotten up to about 1750. That would be the May contract. Came back the day after that on the 8th and dropped down to about 1575. And here with since that time have gotten down as low, back down again to the same low, and just within the last day or so, gotten up to 1748. So yeah, there's a lot of volatility, a lot of movement within a 1575 to 1750 range, but still, it does seem like that if we would trade above that or below that, that would be something different than what's been happening since early March. And yesterday, May closed as we talked about at the high since that time of 1748 and a quarter. For corn, we had jumped up actually with the movement now toward and above $8 for corn. Again, yesterday's closed 799 and a half, and that was down 16 cents from 8 plus the day before. Again, on March the 7th, we had jumped up to about 780, something like that, and traded down as low as about 715. Well, in the last week, we moved a lot higher than that range of about 780. It closed up as high as 825, and now have moved to the lower side. In fact, now we're, as you and I were talking about before we came on air, we have cash prices for corn now and across the state at Colby at 805, Garden City at 850. So positive basis for both of those. Topeka at the top bid, 815, 803 at Hutchinson, 795 at Columbus, 775 in Salina, and that's on a day when the May lead futures were down 16 cents. So $8 cash corn, a lot of locations across the state, something that we would have been surprised to have seen. I should add in also that new crop bids for corn are also doing tremendous. At these places that we've been watching, really a range on the low side of 714 in Columbus to a high side of 769 in Garden City. And the ratio of new crop corn bids to soybean bids, again, it's figured by having beans over corn on that. All those ratios, well, in western Kansas and Garden City, Colby, it's below 2. So strong impetus trying to encourage corn acres to be planted, especially in Kansas where we have such a use for it, but really not a lot of weakness elsewhere. You see a 205 range with Salina bids, 2.02 in Hutchinson, Columbus 2.05, Topeka at 2.09, and generally we think 2.25, 2.3 is neutral. So as Kansas votes, the elevators are seeking to encourage new crop corn acres, it sure seems.
Yeah, the bidding for acres is certainly playing out right now here in the state of Kansas. You've been keeping a close eye, speaking of corn, on the ethanol bids in the state. What's the latest on that front, Dan?
Kansas also, here sounds like we're beating the drum for Kansas today, which is not a bad thing to do, but we have the highest range of corn bids at ethanol plants reported on yesterday's markets. Our range in Kansas from 835 and 3/4 to 860 bids at the plants, ranges from 20 over the May contract to 50 over the July. So we do have some straddling going on of contracts in terms of what the cash bids are given at. And that compares to a range, say in Illinois, probably the next closest is about 798 to 851. and Nebraska 784 to 830. Given the ethanol plants that we have, and in particular livestock feeding operations, we've got the strongest cash corn market in the United States. And I guess if we're wrong, if I'm wrong, then show me the numbers. We just have a very strong corn market. And when you look at that, the ethanol industry, looking at Iowa prices, they're shooting up at a cash prices shooting up about a 45-degree rate. Distillers grains prices shooting up just a little bit less than that angle. Even ethanol prices are doing better. In Kansas, listed yesterday, 252 to 258, and it wasn't long ago, Eric, we were looking at about $2 as something we were hoping to stay at. So you're seeing that situation. Of course, policy initiatives coming this summer are all an encouragement for a strong ethanol market, and we'll see where all that goes.
Briefly here on grain sorghum, speaking of contending for acres, what does that look like here in the state of Kansas currently?
Well, new crop bids range. Well, the strongest new crop bids actually listed in Colby in northwest Kansas, $7.44 for harvest, but nothing weak really anywhere else. You had a Garden City at 704, Topeka 718, as is Salina, also Hutchinson, all of them 718 for the top new crop bid, 699 in Columbus. Cash prices all running in the range of about 780 to about 790 for sorghum. So again, these are great markets for that as well. I would say part of that strength in the sorghum market may have to do with a week in which we had strong exports. But for the week ending April the 14th, exports of about 11 million bushels. And again, we kind of bounce around the sorghum. We'll have one or two down weeks and then strong weeks. Well, we've had having several pretty good grain sorghum export weeks in a row, but I think this 11 is near the top of what we've seen here of late. So we need a pace of about 6.6 million bushels to meet the USDA's projection. So with that type of pace, you do wonder about in that May report coming up, if we'll see the USDA increase the export numbers for grain sorghum. You would wonder with the pace we've been seeing and tighten up ending stocks a little bit. So we'll see where that goes, and that may also be the case, again, depending on what we see coming out of South America with some crop concerns emerging for second crop corn, even some dry areas, Mato Grosso in particular. We've got, and that being one of the issues, along with Ukrainian shortfalls that's holding up these tremendous corn prices, that the USDA probably will come in and be forced to make some adjustments on usage, and probably to the higher side on some of these crops, particularly corn and grain sorghum on the export side.
And exports, once again, for soybeans, we're selling at a semi-feverish pace. Soybeans now, are we not?
Well, they had crop problems, for part that lessened their crop in South America, and there aren't that many places in the world that sell soybeans. We had a pace for the week ending April the 14th of about 33 million bushels. Need about 21 million to meet the USDA's forecast. So very likely that the pace of exports from now to the end of this market year that's anticipated could probably force the USDA to raise their export number, tighten ending stocks again. And when you look at soybean ending stocks in the United States, they're projected to be for this marketing year that we're in at about 6.5%. We have been down to about 2% before, but these extraordinary times that we're in probably forcing the USDA's current marketing year numbers ending August 31st down closer yet to that 2 and 3 area, when they had I wouldn't say it's a comfortable margin, but at least they weren't at 2 or 3%. They were at 6.5%, and very, very likely to see things tightened up. Of course, we talk about these numbers, supply demand balance sheets, but the impact of those things are kind of dwarfed by just how strong these prices are, and either the real or imagined or worried about shortfalls in all these crops on a worldwide basis that are anticipated, and that's what's giving us these tremendous markets that almost markets of a lifetime, really, without using too much hyperbole, in the grain markets.
And to that, topping off the export side, we are selling some wheat, not as prolifically as we're selling, say, beans, but at least the U.S. is moving some of that crop.
Yeah, we had a decent hard red winter wheat marketing week this last week, better than we had been having, about 7 million bushels. We're still behind the USDA's projection for what we need to get to the end of the market year, but 7 million bushels better than what we had been seeing of 3 or 4 per week. And overall, still some market disappointment apparently on not seeing the Ukraine Russia challenges end up and force more U.S. wheat sales. And again, I don't doubt that day will probably come, given the challenges they're going to have getting any wheat out of Ukraine that in a timely manner in quantity. But when that day comes, we'll say, well, boy, then we'll really have hot markets. But how do we not say we have hot markets already when you're looking at July futures at 1143.5? Does that mean we go higher? It's possible. Once you actually see the business do come to the U.S., which it seems it's destined to do someday, then where do the wheat markets go? They're already at 11 plus, all the way from the May contract to May 22 to May 23. So does seem like that, compounded with dry conditions. You see the U.S. drought monitor map running right from South Dakota all the way down to Texas. All those states in tough shape. I think we've got numbers showing that 70% of the hard red, of the winter wheat acreage in the U.S. is in drought, severe drought. So tough times. It'd be a great time for rain to come. It would probably hurt prices a little bit, but we need the bushels, basically.
And finish on a quick point here. We watch these markets, we see these remarkable prices, and where do we stand in as far as producers' abilities to advance market their crops here in 2022, as you look at it right now?
You know, anybody that has access to irrigation probably feels a lot better than people that don't, particularly with the dry conditions that we have. So crop insurance prices have been good for forward pricing. I would not doubt that it's not that we don't see attractive prices. That's obviously there, but I think there's trepidation with regard to actually producing the bushels to deliver on these things. So we may see some very aggressive sellers individually, but I would imagine the bulk of people it's not that they're going to not forward price any, but until they have a little more assurance that they'll actually have a crop to work with, they're probably more cautious. And that caution maybe has something to do with this strength of the forward contract bids that we're seeing.
And said another way, we need rain.
We need rain.
It's that basic. Dan's notes on the grain markets, as always, are posted on the agmanager.info website for your review, agmanager.info. And once again, Dan, many thanks for your comments.
Thanks, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension. We'll return on Agriculture Today.